Okay, well, we could go through some mic realignments. Pleased to introduce our last panel and last session for the afternoon, where we will be looking at MGAs as a new frontier in expanding the reinsurance landscape, opportunities for Barbados. And with us this afternoon to discuss this topic are Graham Bell, and Graham is the Chief Executive Officer of Kema Capital, a specialty lines managing general agency, which he formed with his partner, Kema Capital's President and Chief Underwriting Officer, Jorge Linero, in 2017. Prior to this, he had spent 4 years in the London insurance market as a reinsurance broker, where he gained a reputation as an internationally recognized insurance and reinsurance executive with expertise in insurance and reinsurance broking, reinsurance underwriting, business establishment, management and sale, along with high-profile arbitration and dispute resolution, and insurance and reinsurance degree level student education. Joining him are Matthew Webb, a partner with Delegated Risk Solutions, partner responsible for Delegated Risk Solutions at Concilium Insurance Brokers. Matthew has over 30 years experience in insurance and reinsurance within binding authority and treaty sectors, handling and producing business from the UK, North America, the Caribbean, Africa, Middle East, and Asia. Joining him or them are Patrick Taylor, and Patrick is the founder and managing director of Worldwide Reinsurance Group, and he's a former underwriting manager of American Life and General Insurance with over 30 years in the insurance industry. And rounding out the panel is their moderator, Robert Ali. And Robert holds an impressive track record with over 18 years in the reinsurance market. He joined Active Re in 2019 as their Deputy Chief Operating Officer, and since April 2024 has served as their Chief Operating Officer. Are we ready? Okay, so as you're ready, gentlemen, join on stage.
Thank you. Check. So, as the last set of presenters for today, it is only right that I use the most appropriate analogy to capture the true essence of Barbados and the Caribbean spirit. You gentlemen will appreciate this. Scores are tied, pitch has the right amount of bounce. It's the last ball of the final over. Gentlemen, we need to knock this out of Kensington Oval. Ladies and gentlemen, good afternoon. My name is Robert Ali. I am the Chief Operating Officer of Active Capital Reinsurance Limited, better known as Active Re. Active Re is a Barbados domiciled reinsurer. We have been initially incorporated in 2007, but we re-domiciled in Barbados in 2013. So for about the last 12 years, we have been fully integrated within the Barbados insurance and reinsurance environment. Now, we have had a very extensive first day of discussions, presentations in the field of captive insurance, capital asset management. We heard about Bitcoin, digital assets, operational risk. The last presentation dealt with ESG within the framework of ERM. We also heard from Marlon at BIBA of the established framework that allows captive companies, insurers, reinsurers, investment managers to provide innovative risk financing solutions. Carmel reminded us that Barbados is ranked within the top 10 domiciles globally for captives, and it's number 3 in the Caribbean. Oliver, he informed us that the Barbados jurisdiction is focused on strength, excellence, and efficiency, with a proactive, risk-based approach to attract captive insurance companies to domicile in Barbados. Active Re, however, would like to take the opportunity to shift the dynamic, to shift the focus of the discussions and the knowledge sharing by introducing, and hopefully this is not the first and only conversation we will have on it, but introducing a new risk transfer entity with the objective of establishing value and opportunity to showcase Barbados in the same light such as with the captive industry, and that is with managing general agents. So as we in the industry know it, MGs. Now, to introduce a new topic, it is always best to capture the attention of the audience by engaging with the true stakeholders in the industry. Now, I am very honored and privileged to share the stage and to moderate this panel with the stalwarts of the industry. I must say so, stalwarts of the industry. Amongst them, as you heard Carmel said just now, 100 years combined experience and knowledge in insurance, reinsurance, broking, and most importantly, the MGA field. So I take the time to thank and again reintroduce my fellow members of the panel, Mr. Patrick E. Taylor, Mr. Graham Bell, Mr. Matthew Webb. And we will take the opportunity to have a very engaging discussion to present what the four of us live 24/7. So, to establish some groundwork or to provide an understanding, all of us understand or know of the word delegation. As leaders of the industry, as leaders within our own companies, we are always pushed to empower and delegate our teams to do certain tasks, to build them up. It's no different when it comes to the world of insurance. So, a delegated underwriting authority, or a DOA, is simply the ability of an insurance or reinsurance company to delegate its capital to a third party to underwrite policies, to do claims management, even collections. Now, what is an MGA? Simply put, an MGA is a third party, specialized entity that has been granted this delegated authority by an insurance company or reinsurance company to administer programs and regulate and negotiate contracts on their behalf. Now, there are various spectrums that the MGA can offer to their reinsurer. It goes from the underwriting and pricing to the binding of the coverage, settlement of claims, the collection and settlement of premium, even risk modeling and offering retro protection. Now, to put everything into a more easier visual, all of us, whether we like it or not, all of us need to have motor vehicle insurance. So, as a consumer, we need insurance. We may go to a broker, we may go to an agent, and they will sell the policy on behalf of what us in the industry refer to as the primary carrier or the insurance company. And from there, the insurance company goes towards a reinsurance company for its own protection. Now, where is the creation of value of an MGA? So, as a specialized entity, this MGA is able to now provide that service to the reinsurer or even to the insurer, whereby they will now take that responsibility of underwriting, assessing, and accepting a particular class of risk, whether it be motor, whether it be property, whether it be liability, cyber. We heard a lot of different topics discussed today, and each of these coverages can actually be done by a specialized MGA. So now you see within the broader spectrum where the MGA fits within the whole risk and value chain. So this is a wider dynamic. We go from the traditional client, ourselves, a corporate entity, through a local broker. We have an insurance company. You have a producing broker that would provide the business to the MGA to underwrite on behalf of the reinsurer. And that reinsurer as well can also have the need of getting retrocession protection. So this is where my distinguished colleagues and I shall get into the benefits of MGAs. Now, you must understand again, the gentlemen here have been selected predominantly for the role and position that they hold in this risk and value chain. Mr. Bell, he is, again, the founder and CEO of Kima Capital. So this is the MGA. Mr. Matthew Webb, he is the partner of delegated risk solutions at Concilium Insurance Broking. He is actually responsible for producing that business of the MGA to the reinsurer. So they are bringing that to us. They are bringing the MGA to the reinsurer. Active Capital, Active Re. As the reinsurer, guess what? Even we need help. We need protection. And this is where I go to Mr. Taylor at Worldwide Re. And he provides reinsurance protection to Active Re. So you can see the entire value chain lined up in front of you. So with that, we shall begin our very lively and engaging discussion. Oh, you all thought I was finished? No, Ms. Carmel told me I had 40 minutes. So I would like to start with Mr. Bell.
I thought you might.
Yeah. The youngest one first, right? Mr. Bell, you have an extensive career, particularly, most recently, with Kima Capital. Can you provide for the audience the actual intention of an MGA when it comes to providing that sort of solution?
Sure. So MGAs, by definition, are quite entrepreneurial enterprises. Approximately half of the MGAs currently operating globally, and there are now about, to give you a flavour, there are about 1,000 MGAs in existence right now, and that's 3 times the number 10 years ago. So if you cast your mind back to the first presentation this morning that was given on captives, that gentleman who was an expert in his field said it's boom time for captives. It's boom time for MGAs at the moment, and it has been for a little while. And when I started in the industry, which is far too long ago, MGAs were actually unpopular. Most underwriting operations didn't like the concept of giving away the pen. But that has changed over the years as MGAs have become much more sophisticated. And MGAs now, in the USA, I think it's about 44% of the top 100 property and casualty companies in the USA use MGAs for a notable part of their business. So I think MGAs are here to stay. So the idea is that an MGA is usually big on expertise and small on capital. So the MGA basically offers an underwriting function to an insurance or reinsurance company. MGAs started out being dominated by personal lines business, but that's no longer the case now. My MGA doesn't do any personal lines business at all. So in its essence, the function of an MGA is to lend its expertise and its resources to an insurance company most of the time who, and this is the key bit, who would not otherwise be able to access that business. And that's where it works. There must exist, and pardon the cliche, a very high degree of alignment and mutual understanding between the MGA and the carrier that provides the paper. And as you are bound to hear shortly, it does not work unless you have a committed and professional carrier, broker, and almost always reinsurer. Shortly, I'm sure we'll get onto the subject of fronting. Not all MGA relationships are fronted, but that is a significant part of the market as well. So that's it. In a nutshell, you're lending expertise to an insurance company who could not otherwise access that business at the level that you're accessing it.
Yeah, absolutely. I'd agree with that. I mean, I think when Lloyd's first started out and they had started the cover holder MGAs, it was to access territories and, small, as you say, personal lines business in those territories, so they didn't actually have to set up there. Now, obviously, Lloyd's has grown. It's moved into various territories. I think possibly to their own detriment. They probably wouldn't like me saying that because actually it's put a lot of cost on their business. So I think, what Graham's saying is retrenching again, and actually the MGAs are becoming more prevalent.
Thank you, Matthew, for extending on Graham's point, and Mr. Bell, thank you as well for that understanding of the value that the MGA adds to the insurer or the reinsurer. Because as you mentioned, there is often that one, either knowledge cost or economic cost of an insurer or reinsurer being able to offer such a product line on its own, right? It may often be too costly to build a team internally. And again, if there's already an established entity or an established team that can do it, then you can outsource it. And this is exactly one of the benefits to be derived. Now, Matthew, as you rounded up Graham's point, from the broking side, again, there's always an establishment. First of all, there's oftentimes the concern that do we really need brokers? I don't know. In this case, we do. So brokers play a dual role in the operation of the MGs. Now, I say dual because they can negotiate the binder between the MGA and the reinsurance company. And similarly, they can negotiate the reinsurance protection between the reinsurance company and the retrocessioner. So, Matthew, again, what is existing in the field of brokers and in relation to the MGs that gives it that additional edge?
That's a good question. So I think going back to the first point with regard to actually territories and how MGA started cover holders was actually the brokers used to travel to the regions, used to discuss business and obviously bring that business back to the capacity providers within London or different territories. And I think that is still the case, although it's quite a symbiotic relationship now with actually the capacity provider and the MGA, a lot closer nowadays, but you still need a broker in between, in my opinion, to actually talk about negotiations. I think it's sometimes having a client and a capacity provider or insurer talking to each other directly doesn't always help because you obviously have to mediate that, but I think brokers still offer a very good role in bringing that business along.
They're marriage guidance counsellors.
Yeah.
So effectively, what Matthew is presenting is that the extent of the business relationships that the brokers have developed in various markets over the years, this is now extended through both the MGA and to the benefit of the reinsurers. Now, from I would say we're outnumbered, or we're outnumbering them, Patrick, because we have two reinsurers on the stage, but in this essence, Patrick, as I said, the Worldwide Re Group and team provides support to Active Re in being able to support the MGAs. So, Patrick, I would like to have your flavor or your input in regards to the actual benefit that the Worldwide Re team derives from the use of MGAs.
Well, quite frankly, if we were having this discussion 30 years ago, we won't be talking to these gentlemen. We would just be talking to the guys in London, and from there, we would see them periodically during winter time, which is preferably when they come to the Caribbean, and they negotiate treaties. And based on the type of treaty, whether it's a quota share or facultative treaty, we would feel secure in their going forward with what we have to do is supporting the insurers and the retail brokers and obviously the consumer. In today's world, the growth of the MGAs are now not only here to stay, but it's critical. And it's more critical for small and medium-sized reinsurers around the world. We save tremendously in costs and expertise, and very often those very same contracts of delegation of authority, their contribution to the technical aspect of it is important. And the reason for that is a successful MGA is a composition of skill set from brokerage as well as underwriting. And if you tap onto that, a good claims department with a nice IT program, you have the elements for a successful MGA. That minimizes the worry, concern of a reinsurer in what is being done on the front end. Keep in mind, reinsurers, we see it at the very end of the process. Usually when the claim occurs, and we have had situations where by the time the risk is written, you have the claim. So therefore, the information that we receive from the front end, which is the broker to the MGA, becomes very important. That trust in what's being done up front, their knowledge of the market, particularly the segmented markets that they are operating, becomes the most important aspect to a reinsurer. So we got to minimize the amount of human resource required, the amount of technical expertise we require, and systems we need to put in, because very many of the MGAs have fantastic systems which we can easily integrate into what we do on a daily basis. So many reinsurers do get to sleep early at night because we worry less when we are working through and with a MGA. Now, the other key aspect which the broker provides to the MGA and ultimately to us is that no one reinsurer very often provides the singular capacity for an MGA. Very often it's a combination of 5 or 6 or 7 of us on the same program. Therein requires that preparation of documentation of a collective nature. And reinsurers don't necessarily like to talk to each other anyway. So the need for a broker and the need for an effective MGA becomes more apparent as we move forward in this new dynamic landscape to do the business of providing security and providing assurance out there.
Thank you, Patrick. You've mentioned two very key words. One is worry, and two is systems. Now, in terms of the reduction of the worry, you're absolutely correct, because when you go through the extensive due diligence, as I use an analogy here. This is when you're courting, right? So you're courting the MGA, you want to make sure this is the one you want to get married to, right? And part and parcel of that is seeing the extent or the scope of services that this MGA can afford and bring to the table. Because you don't want to, like I said, on board an MGA that is only going to provide one functionality of just underwriting. And then when the claims occur, it's now left up to the reinsurer to do it for themselves or to collect the premiums, to do their own risk modeling and even obtain their own reinsurance protection. But I would say the true value of an MGA is when they are able to provide an extensive framework where they do the underwriting, they do the premium collection, they do the technical accounting, they also do the claims management, they do the risk modeling, and they can also present as an all-in-one package as their proposal, as their business plan, which Mr. Bell actually does.
Yes.
A reinsurance solution behind it, a retrocession protection. Because ultimately, yes, it is our capital that we are providing to the reinsurers, to the MGAs as reinsurers, but the MGAs, and I would use the same word that Matthew used shortly before, it's a very symbiotic relationship. They depend on us just as much as we depend on them. So they're not going to risk that reputation with their reinsurer, so they will do everything in their ability to make sure that they protect the capital and the reputation, because we go hand in hand. The MGAs and the brokers and the reinsurers all work together. Another point you made, Patrick, the information systems. We live in a very heavy data age. Our colleagues before presented that. Data is important, but the quality of data is also important. And when you have legacy systems that are heavy and burdensome, it is not easy to capture and transfer across multiple platforms. And MGAs as being very entrepreneurial, and again, with leading IT systems, have been able to design and create bespoke tools and databases that allow for proper capture and dissemination of information so that it goes extensively throughout not only their network, but that of the broker, that of the reinsurers. So, gentlemen, I think we have touched on the 4 key points of the benefits of the MGAs in terms of the underwriting experience to be obtained, the ability to access locations that the reinsurers may not be operating in, to leverage the relationships that have been built in different markets over the years, and again, moving away from burdensome IT systems. So, I believe we have covered the whole value chain. Now, I would like to put all the pieces of the puzzle together. With Mr. Bell, with Kima Capital, Active Re currently has 4 delegated underwriting authority agreements. Through Concilium Broking with Matthew Webb, we as well have 3 delegated underwriting authority agreements, plus 2 retrocession contracts. So Matthew handles both an inward and an outward. And Mr. Patrick Taylor, he provides support to Active Re on 4 programs. So you can see where, again, through the initiation of the risk from Mr. Bell, through Mr. Webb, through myself, to Mr. Taylor. That has now spread the risk, but we are all benefiting from the same attributes that has been afforded to us by the MGAs. So gentlemen, I don't know if there's anything else in general we would like to present initially. Again, this is the first of many discussions that we've had, that we will have. There's a lot more to go into. But again, as a new topic, we just want to give a tasting, right? Before we open the floor to the audience. Like I said, gentlemen, any last comments?
I think just to say that it's a sector of the business which, as Patrick said, is not going away. It's going to continue to grow. Most credible MGAs perform almost all of the functions of an insurance or reinsurance company, save only the provision of security and capital. I think that the extent to which you will see MGAs participating in the market over the next decade will continue to increase. It could be quite a sharp increase, actually. The MGAs are quite, I'm not trying to sell the fact that we're an MGA, but MGAs are quite slick operations. You have to give the insurer better value than they're already getting. So MGAs don't cost very much to run. And although we're really interested in long-term relationships, of course, one other advantage for the insurer is that if you want to write a $100 million property portfolio, you can either staff up with 24 people and hope it all works, and then good luck getting rid of them when it doesn't, or you can engage with an MGA. The efficiency of access and egress is unparalleled. MGAs can be switched off at literally a moment's notice. Well, 90 days notice normally, but so it's a growing part of the business. Keep an eye on it. Many MGAs are setting up what we call sidecars. In fact, they're just captives. So that is obviously something that might be of interest to Barbados. Many MGAs see the setting up of a sidecar to take some of their own risk, eat their own cooking, to quote Warren Buffett, is a natural corollary. And you don't need me to tell you that Barbados is a highly credible domicile, and I wouldn't be surprised at all if you see quite a lot of activity over the next decade.
I very much appreciate that statement, Graham, because it now gives a full perspective. Again, as it has been established, Barbados is a significant domicile for captives. And as Graham has just mentioned, even the MGAs themselves are forming their own captives, because we've heard it again today. You must put skin in the game. If you believe in your work, if you trust in your own work and your underwriting, then, as the saying goes, you put your money where your mouth is. So this is, again, another value that can be propositioned in Barbados, because we already have that extensive captive framework. So adding the MGA element into it, again, as Graham again said, natural corollary. So, Mr. Patrick, you seem eager.
Yeah, because what Matthew just said, even the reinsurers are forming their own MGAs.
You're correct.
And taking advantage of extending into treating them as captives. So this morning's dissertation was quite enlightening to any reinsurer understanding the growth potentials. As a traditional reinsurer, of course, we strongly support the MGAs because we have that symbiotic relationship. We have that, by selection, we get to maintain the underwriting guidelines and outlook through that MGA. So you see that MGA as an extension of yourself. So the only way MGAs are going to go away now is if the reinsurers go away. And you understand the fundamental cornerstone of the reinsurance market is the reinsurer. They are here to stay. My forecast is stronger than what you're looking at. I see a tripling of the MGAs on the market. And I see MGAs emerging in some markets and some locations where you least expect it, because there's a lot of interest, there's a lot of investment, and a lot of desire to prosecute this area of the business landscape. The only thing that will restrict their growth will be the availability of personnel, good personnel. And I heard this morning efforts are being made in certain quarters to deepen the knowledge and training. That singularly is the industry worldwide biggest and greatest problem. The lack of experts, lack of qualified, knowledgeable individuals who understand the ebb and flow, but more so the ability to handle and manage risk when it's a very hard market and capacity is at its thinnest. We just don't have those persons. We have persons when things are great, they're good to go. But currently, finding a good underwriter, finding a good claims examiner, finding a good adjuster, finding even in the accounting area, to manage the multiplicity of diverse inflows, their understanding of the concepts that go behind those documents or those contracts executed are difficult.
And it is of paramount importance.
Yes.
Now, you've mentioned the human resource capital, but we are also in the market whereby there's a lack of suitable underwriting capacity. So this is another very important point, that the reinsurers are very selective when they come to onboarding an MGA, because again, they have to get bang for their buck. Everybody has shareholders, everybody has KPIs to achieve. So even with that, you find that there's now a drive towards or moving away from the traditional capital and moving into the financial markets. So even with the evolution of the MGs, they can now utilize the ILS framework and have those conversion into reinsurance underwriting capital. So there's a lot, as you gentlemen have said, for years to come. There's a lot of expansion still to be made. And again, this is the value that we would like to propose to the market in Barbados, to be able to ride the wave as early as possible. So, gentlemen, I think we can open the floor to any questions, if there may be any. I know everybody just wants to go home.
Sorry, everyone. Hi, I'm Russell Streeter with the Quest Group. We have investments in 2 MGAs in UK and Europe. If I was hearing about this MGA model for the first time, my question would be, how does the capacity provider, who is ultimately responsible for any and all claims that come in the future, how are they happy to delegate, i.e. give up control of the underwriting to a third party? In other words, how does the capacity provider incentivize the MGA to make sure that their risks are more aligned, even though the MGA is basically the service provider and is not the capacity provider?
I will take the opportunity to answer that. It was commented earlier, to the extent to which there has to be a lot of trust between all of us. Matthew needs to know what he's bringing to me, what he's bringing to Patrick. He needs to be sold and convinced that the product that Graham is offering is valid. First and foremost, valid, and also valuable. Now, your question also was, what is that level of trust and what is allowing the reinsurer to do so? Now, there's a lot of variables you look at, which in the normal sense would be the historical data, the performance, but I would move away from that side and I will actually focus on the MG, because the MG, as Graham mentioned, is looking for long-term value. The reinsurer is looking for a long-term partner, and the broker, again, is looking forward to managing that relationship or those relationships for a very long time in the future. So with that understanding, the MG is not going to come and propose or promote something that cannot be achieved. It is about managing expectation, yes, from the reinsurer side, from the broker side, from the MGA side. But the most important thing is establishing that relationship and maintaining it. Because once they lose that relationship with the reinsurer and they lose the underwriting capital, one, it is going to be a challenge for them to get a new set of capital, and two, their next capital providers are going to ask the first question. If you've been existing for 10 years and you come to me now on the 11th year, what happened to your capacity providers from before? And they're going to have to say, well, we messed up. So that is the whole objective. Their whole goal is to maintain that relationship, to maintain that value. And again, yes, this is the market and the industry that we're in. We are in the industry of paying claims. We heard earlier again, we cannot predict the effect and the occurrence of CAT events, catastrophe events, but we can prepare for it. Things happen. We're in the industry of paying claims. But the most important is that we are entrusting the expertise, the risk assessment, the underwriting, and again, extending to the claims management to ensure that the claim is properly assessed and it is properly settled. Again, not only in terms of the claim itself, but also in terms of the reputation. At the end of the day, the MGA is the face or the representative of the reinsurer. They have to underwrite the risk, they have to settle the claim, and if that is the case, they have to maintain as an extension or a delegation of the relationship with the reinsurer, or as a representative of the reinsurer. So yes, there's a lot that goes in to being in a position to onboard an MGA. For Actively, it takes almost 9 months for us to do a proper in-depth due diligence. We focus on compliance, governance, your IT framework, not only your underwriting, but your claims, your technical accounting, your operations, all your policies and procedures, because why? You are now an extension of the insurance company. You have to have the same levels, the same infrastructure, the same controls that we have, so that it is now, again, an extension of ourselves. So us bringing them on board is, again, just an extension of the team. Now, if I have to put that into figures, when I first joined Actively 5 years ago, it was 36 of us. Today, we are 82 Actively employees. But if I have to be very truthful about it, we are actually over 125 employees of Actively. Why? Because we consider the MGs as part of us, part of the family. So, to be part of the family, you need to walk that line. I hope that answers your question also. Thank you.
I was just going to add to it, actually, and just say that, obviously, an MGA, the lifeblood of an MGA is the capacity provider. So, if they're untruthful or they don't do what they say, then actually the MGA folds. It has no option.
Yeah.
So, you're looking at this as a kind of, you have people in the market that have been in the market a long time, and obviously they actually feel that, actually I could do better. I want to be in a slick operation, like Graham's done, to set up an MGA. They have people that trust him, so actually want to support him, has reinsurers, more importantly, that trust him, that want to support him. So the capacity provider knows that actually they are safe to support Graham because they've got reinsurance behind. So, it is the lifeblood. And I know you're sort of saying incentivize and so on and so forth, but the incentivization is the fact that, spent time setting up the MGA, and if he goes out and burns the capacity provider, then that's it.
That's it.
Yeah, no, the first thing I do every morning is feed Ringo. That's my dog's name, not my wife's name, by the way. First thing I do is feed Ringo. The second thing I do is say, where's tomorrow's capacity? And I mentioned earlier on alignment of interests, and what Robert and Matt have just said is absolutely correct. And the other thing is, of course, the golden rule for a capacity provider is to make sure that the MJ's upside is profit related, not volume related. Mm-hmm. And that should be pretty obvious, but you'd be staggered at how many times I've seen the opposite. Most credible MGAs are not interested in what the MJ fee is. It should just cover our basic expenses for the service we provide, but our EBITDA booster should come when we produce proper profits for our carriers. And to do that, any MGA's underwriting team has got to think like an insurance company's underwriting team. Soon as an MGA starts writing for volume, it's done.
The losses catch up.
It always gets you in the end, yeah.
And the real incentive is that profit commission being taken seriously, because I think the second year of an MGA operation is where you, as an MGA, you really begin to earn your keep.
Yeah.
So the longer you have that relationship going and the trust, you would find that both parties, all parties, become serious beneficiaries in the provision of the services for the consumer and for the market.
Thank you very much, gentlemen. Any other questions? Or I think we're good for today. Well, gentlemen, thank you very much. It has been an
Thank you,
honor
thank you.
indeed.
Robert, my pleasure.
Thank you very much.
Thank you. Is it? Yes. Okay. Thank you so much, Robert, Graham, Patrick, and Matthew. And thank you as well to Active Re for, especially Mr. Ramon, for suggesting this panel. As Robert said, it's kind of a new area, and we're always looking, or a relatively new area for Barbados, and we're always looking for things to bring to market to spark people's interests. As our president would have said, Barbados is not a one-trick pony, and therefore, while some of the other markets are known for specific, either it's funds management or maybe captives, etc. And yes, they do attract a lot in that area. You need diversity. You need to diversify what you're offering in order to make sure that you don't put yourself at risk when the markets change or interests change or things develop. So we are very pleased to have been able to introduce this as a topic. And thank you all for having stayed right to the end and for giving us your attention. And so we will now release you for the evening and look forward to having you join us tomorrow morning. We'll be starting again at 8:30. Travel safely. Bye.